Hello there everyone, my name is MrSpotOn and welcome back to my YouTube channel. I hope that you guys are doing fantastic, but as for myself, I'm still really sick. But today I decided to do a video in the office more professionally, and there is a lot to talk about, to be honest, but I'm not going to be talking as fast as usual because my energy is still not there. So right now, what is very important for us to ask ourselves is, and a lot of people have been sending me messages saying, Thomas, why is Bitcoin not breaking down just like you promised yet in this vicinity? And I have an answer for you. I mean, this is a very interesting situation that I really want to discuss. I want to discuss some really interesting macro factors. I want to discuss really the potential reason why instead of a dump, we actually saw a pump right here, and what it was, and what did I do with my short trade? What am I expecting right now? And what is there to come tomorrow? Because tomorrow is a huge day, and I think that either we're gonna break out today and finally find a direction, or we're gonna do it at the latest tomorrow at a very specific time. So without any further ado, if you want to know all these things, and you really want to, because Bitcoin is currently at a breaking point, so are many other things in the current financial world, in the current financial environment. So if all of this sounds great, then please hit that subscribe button. Also hit that notification bell so that you're always notified when I make a new upload. And please do like the video. This is all that I'm asking, guys and girls. Just like the video, because I'm still sick and I'm still trying to create this content for you on the daily basis. So go down there, hit that like button, make some noise out in the comments for MrSpotOn, because even though it didn't play out exactly as I predicted, like precisely, I'm still MrSpotOn, and you're gonna see exactly why. So first things first, I mean, we still got some technicals to take care of and to talk about, because we've been in this range for quite some time. Right here, it's very obvious, and right now, I mean, we're narrowing down. I mean, look at this, it's absolutely ridiculous. Look at this channel, and I marked it with, you know, blue as the absolute extremes, this here, and then the reds that are a bit more precise-ish as a support. I mean, look at how many confirmations there are. This at like about roughly, it's not a perfect diagonal horizontal line, but nonetheless, so it's like 19,270 right here, and we're still bouncing, and we're trying to find a direction, either break above or below. So the thing is that, so this is again also a very tradable pattern, obviously. I mean, look at how volatility is being squeezed like this, like literally into a thin line, which is absolutely crazy. But the longer we have this kind of a thing, the bigger, the more massive the breakout is going to be, just statistically. So, and here again, I told you that I'm taking a short trade from this vicinity going downwards, because obviously, because of the bad results that came out in terms of the PCE, and we're going to talk briefly about this in this video as well once again, but the market just reacted to the upside. And everybody was literally laughing at me in the comments under the previous video, saying that Thomas, blah, 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 this is funny, how do you predict the market, etc. They were all going long. Well, I mean, I still stick around till the end. I still have the same short trade open. I just did not believe in this pump. I mean, it's an idiot can only believe in that kind of a pump with this kind of PCE data. So I still kept it. It still is in a very small micro loss in comparison to the profits we've been taking. This is just a joke. It's a small loss. But again, it's a loss until, you know, only when I realize it. At this point, it's just pretty much a break-even trade. And those who were going against me, enjoy your liquidations, people. Enjoy. So listen to MrSpotOn when MrSpotOn says something. Subscribe to this YouTube channel, watch my videos from the beginning and until the end, and trust the analysis. And call me MrSpotOn down in the comments, because again, it was such a evident fake pump. It happened, but the question right now really is, why did it happen? So number one, it could also be, you know, a lot of people are saying that if everybody is expecting the market to go down, the market maker is gonna make a spike up just to liquidate everybody and to make money. So this is, and comment down below what you think is the reason. And by the way, guys and girls, if you want to be trading actively on Bitget yourself, or really or maybe you want to be trading on Bybit or Binance, then down in the description of this video or in the pinned comment, you'll find up to $12,700 in initial deposit bonuses, $600 with Binance, $4,100 with Bybit, and up to $8,000 with Bitget. And also Bitget gives you all these bonuses if you use my link down below. So check, pause the video, see all these insane bonuses, and use them to your advantage. So a lot of people said that it was just simply a manipulation to get people stopped out, and that's why it came back so fast. Because again, there is really no reason for us to pump like this. So let's just go over these things bit by bit and step by step. Let me explain this to you once again, and then we're gonna come to the catalyst of what is finally gonna break this whole shape, and when we're going to finally see a big move and a breakout out of this narrowing of the volatility. So for one, the PCE data came in, so let's just find it right here first, and here it is. So the PCE came in at 6.2%, and everybody was like, boo, but it's good, it's amazing. I don't believe that the market pumped because the main headline PCE came in better than last month, because if we're going to take a look at the release, and I mean the majority of money that is moving the market is smart. It's not looking at the dumb figures like the headline PCE. It's going to be looking at these things right here. So for example, the main PCE, yes, it declined, but the core one, which excludes food and energy, it actually went up. So what is the difference really? So the headline PCE, it includes basically everything, and also includes the oil, so, and the gasoline prices at the pumps. And we already know that we've seen like a 40%, let's go to a bigger chart, we've seen a 40% decline in the oil price. So obviously, of course, yes, we're gonna see some kind of an effect on inflation here. But guys, Fed doesn't really care about this reading. I mean, you gotta understand this. They care about this one that excludes food and energy. Why? Because Fed doesn't have any control over the oil price. What they have the control over is everything else, and everything else is still going up. So we're still in a very, very bad situation when it comes to inflation. It's absolutely terrible. So, and for this reason, it was an obvious short trade when it comes to Bitcoin and all the high-risk assets. What we have to understand here is, if we're gonna dig deeper, and this we're getting into more complex stuff here, is this stuff right here. The core PCE 4.9 instead of 4.7 expected, which is really bad once again. Then the headline PCE 6.2 instead of from 6.4, so it was very positive, and a lot of people said that, well, we're going to be longing, it's peak inflation, which is not, once again, because Fed cares about the core PCE, not the headline one. So then the next thing is that a lot of people were also saying, and they were like so happy about this, was about the personal income that has gone up by 0.3%. Okay, great. Then personal spending went also up by 0.4%. And this is what a lot of people were also very happy about. Even though, real personal spending went up by 0.1% versus 0.2% expected. But okay, who am I to say anything? But now the next thing is that something that I also already just described is that this whole rally really, that this decrease in the headline PCE was helped by a pullback in gasoline prices and underpinned by sustained wage gains. So again, people made a little bit more money, and a strong labor market. But to be honest, a strong labor market is actually bad for us, because when there is a strong labor market, Fed can keep tightening the policy and keep increasing the rates until something breaks, like people start losing jobs, and that's when they're gonna pivot and go into quantitative easing again. So this is actually bad for high-risk assets. It's not really that good. So, and Americans have ramped up spending on services, so people spent more money, so that was also taken as very positive. And the durability of consumer demand has been a key source of support for the economy, but it's also contributed to persistent price pressures. But now, guys, let's be realistic though, okay? I don't know, I mean, this is obvious for me, and that's why I kept my short trade. So how long Americans can continue to spend at such a pace isn't clear. Okay, we're getting to the real truth here. So the consumer debt, including credit cards, Amex credit card, it's an all-time high for the bottom 90% of U.S. households. Look at this. So the borrowing is at all-time high, so the leverage is at the all-time high. And now when the big question then becomes, what is with the personal savings? How much money do people actually have? So, and the answer is, here's the answer. So this is 5 years of personal savings. We saw with the COVID that it was increased because, the checks were printed, people were getting free money, and then savings went up. But now we are below 2018 level in personal savings. People got no money left in their pockets. I mean, this is unbelievably bad. What are the even, I mean, this is just ridiculous. So, I mean, it's just painting, we're gonna get to a very important aspect of this video. I'm just painting the picture right now, guys and girls. And I'm talking slow. And by the way, let me know that in the comments if you prefer me talking slower, because I just simply can't talk faster, I have a fever. But let me know if if it's nice when I talk slower. Now, the next thing that is very interesting to mention is that the Bitcoin held 19K, but the volatility, this is an older article, the volatility was expected on Friday, which is when also the PCE was announced, because there was $2.2 billion of Bitcoin options were expiring. And when it, I highlighted something. So that is why the 2.2 billion Bitcoin monthly options expiry on September 30th will put a lot of pressure on the bulls. So they were considering saying that there will probably be huge pressure on the bulls. So again, it was also quite negative, even though the bears seem slightly better positioned as Bitcoin attempts to hold the 19K. So basically what we saw here, and this pump also, let's go to smaller time frame. Again, once again, this just ridiculous bullshit, in my opinion, pump was also possibly contributed by the bulls trying to squeeze the bears out of their income in terms of the options expiry, because again, the lower the price is for the bears in terms of options expiry, the more money they make. So if the options expired at in between 18,000 and 19,000, bears would have made 350 million. If it would expire between 20K and 21K, then basically the bears would only make 135 million. So this could also be, what I'm trying to say here is that it could be a manipulation of the market simply because of the options expiry as well. But let's move on to the next topic, which could be, well, it's going to be slowly dragging us into the explanation of mine that I most likely believe in. And so we've already seen this, that Bank of England has intervened with temporary quantitative easing to stem the sell-off, because they believe right now that England is in deep trouble. And Japan has done the same. Japan has gone into quantitative easing already. So, and this was also a hopium scenario that Jerome Powell and the Federal Reserve in the United States is going to go into quantitative easing as well. So, and this could be something that held up the price a little bit for one particular reason. And that is the meeting that is going to be taken, that is going to be held tomorrow, October the 3rd, at, let's see, 11:30 a.m. Eastern time. And again, this is a normal type of a meeting. It's an expedited Fed meeting, but I think it's going to be in the response to the PCE data that just came out absolutely terrible. So, and this meeting could be something that the price really is waiting for. And this is something that I'm going to keep you guys updated about. So please subscribe right now and join my free Telegram channel. There is a link down in the description of this video. And also follow me on Twitter, just a verified account. A lot of breaking news updates are there as well. So, and basically this is something, because if Fed is going to come out and say that for whatever reason, which is at this point is for me unbelievable, that they're going to come out and say that, you know, we're going to follow suit with UK and Japan and going to, you know, temporarily suspend our rate hikes, we're going to rally for sure. We're going to break above and we're going to probably go to 30K on Bitcoin. Very, very possible. So it's obvious, because when there is money being printed, it goes to high risk assets, it all just goes up. It's just the market cycles. But at the same time, if Fed is going to come out and say that, no, sorry guys, we're going to just right now, as I said before, because of strong jobs markets, and there is still big room for Fed to crush the economy, they're going to say that, you know, the next rate hike is going to be huge, or they're going to maybe decide on some kind of rate hike during this expedited meeting. Who knows? This is going to definitely break Bitcoin down. And at this point, in this macro environment, just using pure logic and pure common sense, that doesn't always work in the market. I understand that. I'm still betting on the down move, and I'm betting that it's going to break down below. So that's why I'm still holding my short trade. And now here is another, you know, hopium scenario really, that Eurozone is currently at risk of financial meltdown as market chaos spreads. So I'm just going to summarize this article for you guys. So here, right now, Eurozone is in huge trouble. So, and there is also some inclination, and something is telling us right now in this article, that's what they're talking about, that they're going to be potentially doing the same as UK and Japan. So they're going to turn on the money printer and go into quantitative easing to simply prevent the economy from complete and total financial meltdown that is going to be potential on the same scale as it suffered the crisis a decade ago. So it's possible that they're going to turn on the money printer as well. But of course, it's a separate topic as to what it's going to mean in a long-term perspective, because if we're going to be just injecting steroids into a dead cat, it's not going to make it really run fast for too long, right? It's going to turn it into a zombie that's going to just kill everyone at some point. So, but that's a separate topic. But this is also some kind of a hopium. So that's why we really want to see what's going to happen tomorrow and what Fed is going to say. Because if everybody is going to be turning on the money printer, then again, it's going to be very cool for a short-term perspective, but long-term, I don't know, man. And then lastly, guys, take a look at this. UK pension funds are getting margin calls. So if you know what a margin call is, this is like it. I mean, man, like talk about the disarray of the current global economy when UK pension funds, people's pensions are getting margin. They're going to be bailed out, but nonetheless, I mean, just this is the moment of the Lehman Brothers. Some of my friends are saying is coming. Is going to be the Credit Suisse? Is it going to be somebody else who's going to go belly up? That's something we're going to definitely see. But for the time being, I mean, honestly, I don't see any reason to be bullish. Even if we're going to see a kind of a breakout here and then another rejection go down, I'm going to sustain it. I'm not going to just jump and just long it, because longing this dead cat right now just makes no sense for me. If I'm wrong, so be it. But I just presented the evidence that is out there, and the deciding factor potentially is going to be tomorrow with this expedited meeting. Guys and girls, take a look at this course on crypto that I've done, so you can actually learn how to do all these things, how to use BitGet, and how to claim all the insane bonuses. Make some noise down in the comments for MrSpotOn, because if you listened to me and you kept this short trade, then you're still, again, it's a very tough spot right now. The market is very tough right now. It's very easy to trade the bull market. Bear market is very hard to trade, and we've done really well this year. Peace and love. Thomas Krallo. Stay smart, stay rich, and I'll see you in the next video. Bye-bye.